Uh, Seems that we have all speakers here, so can we start now? Pablo, can we start now? Yeah?
Yeah, absolutely, yeah.
So it's your turn right now, okay.
Okay. Hello, good evening or good afternoon, depending on where you are. Welcome to this session, and thank you so much for joining us today. Today I have the pleasure to moderate a session on financing for resilient urban infrastructure. And for that, we've got 4 excellent speakers, which they are going to discuss the various solutions on the topic that I just mentioned. Among us, we have Matthew Trino. He's property investment project coordinator within UNEP FI. We have also with us Dr. Alexander Fischer, who is a program director for climate change, environment and natural resources from Deutsche Gesellschaft für internationale Zusammenarbeit, best known as GIZ. We have the pleasure to have today Ping-Yan Shah, who is a senior strategy officer, strategy policy and budget department within the Asian Infrastructure Investment Bank. And also, last but definitely not least, we have Laura Georgelin, who is a program manager at the French Green Building Observatory. Facilitating the discussion, we have with us Wang Kai-jun. Apologies if my pronunciation is not excellent. She's a representative in New York, and she's also participating in this global forum on human settlements, and she will also make a small overview on a topic at the very end of the presentation, besides facilitating the discussion. And I think we have also with us Chen Yun Gang, who's president of Hong Kong Urban Management Institute, vice chairman, Committee of Cities, Innovation and Promotion. Having said that, I just would like to give some information on the structure that we will follow. There will be 4 presentations from our speakers, and right after every presentation, there will be each presentation will last around 10 to 15 minutes, and after each presentation, we'll open the floor for the audience to come up with questions. We will try to address in 5-7 minutes. After that, after those 4 presentations, and as I said before, Wang Kai-jun will give us a small overview on the child-friendly cities initiative that is currently going on, hosted by UNICEF. So we would like to make this session as interactive as possible. So please make sure that you use the chat box as much as you can, and we will try to address every single question that is being posted. And just grounding the discussion, why are we focusing on cities? Well, I would say that cities are centers of risks and opportunities to enhance global resilience, and in particular when it comes to dealing with the effects of climate change. And just to give you some facts that probably the audience is already aware, but I think it's important just to highlight them. Around 70% of the global GDP comes from them. Around 68% of the world population is expected to live in cities by 2050. They are the biggest energy consumers and therefore emitters. Assets in cities, because of climate change, it is estimated that their overall exposure, especially regarding climate-related risk, amount to 4 trillion. And this is only going to get worse if we continue the current pathway in terms of global warming. And not only that, lastly, they are expected to receive around 1.1 trillion per annum in infrastructure investment. So we need to make sure that investment is spent properly and is spent in the right infrastructure. Okay, having said that, I would like to start with our first panelist. As I said, Matthew Alterino is with us. Matthew is an urban planner with policy development, research, and program management experience in green finance and sustainable built environments. He's presently a program manager at UNEP-FI and coordinating activities of its property working group. Other recent roles include consulting to UN Habitat in the promoting energy efficiency in buildings in East Africa initiative, and through an affiliation with London School of Economics, he is a contributing researcher and author on multiple studies on green urban development and infrastructure investment. So Matthew, I think the floor is yours.
Thank you, Pablo. I'm sharing my screen so you can see slides. Okay. Do you see the PowerPoint presentation?
Yes, we do.
Okay, well, thank you for the introduction and the opportunity to speak today. I'm very happy to be here. This is, I believe this is my third time speaking at the Global Forum for Human Settlements. Just it's every year that it's been held has been very interesting to me. And so I'm quite pleased to have built a relationship with the organizers who really do excellent work bringing this together. I represent UNEP-FI, the UN Environment Program Finance Initiative. We are, in effect, a private sector branch or private sector focused branch of the UN Environment Program. We work with the private finance sector. We're almost, I think the easiest way to describe it is we're like a trade association or an industry association. And so we have more than 300 financial institutions globally who support our work. And the work that we do is trying to promote sustainability in finance and working with leading institutions in terms of the way that they approach finance decisions to make sure that sustainability is fully integrated and to shift market practices by virtue of their leadership activities. We cut across banking, investment, and insurance. I work principally with investors and then specifically on property and building related issues. And so while the topic here is infrastructure, I'll take a more specific view on the buildings sector. And as I'm sure many of you know, the buildings industry or the real estate sector are enormous stores of personal and national wealth. So it's critical that buildings are built to withstand the effects of climate change or are retrofitted to take adaptation to climate change into account and to build up resilience. And so UNEP-FI over the past couple of years has been working with a group of leading institutions to apply something that's called the TCFD recommendations, the Task Force for Climate-Related Financial Disclosures. And that was set up a couple of years ago, or a few years ago. And it's a framework through which financial institutions, but also corporate, private businesses can. I think there's someone else's microphone is on. It's a framework through which private business, corporates, financial institutions can understand the exposure of their business operations or their assets to potential climate risk. And that sits on both the transition side, and so moving from sort of our present energy system to a low carbon economy, and the potential value loss or value gain opportunities that will be associated with that. But then also on the physical risk side, looking at the effects of climate change, extreme weather in particular, so both acute events and slow onset events, and how that will affect business performance and asset value. And so we worked with, and the point of doing that is to both improve internal risk management practices, but also signal out to the market and provide more information to market participants about the risks that are inherent in the financial system. And so therefore, with that information, institutions start to take effective steps to mitigate that risk. The slide that is showing now is just a very simple representation of the process that we went through working with an outside service provider by the name of Carbon Delta, who's now part of MSCI, to analyze the exposure of individual assets, and so properties, to extreme weather events, and then measure that in terms of their vulnerability. And so how much of that asset value is potentially at risk based on damages that might result from cyclones, from flood risk, wildfires, things of that nature, but also look at some of the operational cost changes. So for example, with extreme heat, it will be more costly to run the building if it needs to be cooled to a greater degree than had traditionally been the case in the past. And so the graphic at the bottom is just, again, a simple representation about the way you start to analyze shift in weather patterns and how that affects the distribution of effects. So you know, the sort of the top line curve there, if you will, that goes more sharply up and then down is what we call the previous climate, you know, the historical record. And as the climate changes, things shift out to the right. And so it gets hotter and for longer durations, things get hotter. And so you can start to do analyses based on these projections of what the future will look like. So scenario analysis to say, for example, just in this case, when you have more extreme heat, what might be the effect on buildings and the way that they're operated. And so that's just a very, very simple introduction to some of the modeling and scenario development work that we've done. So again, working with this group of private investors who hold assets all over the world, but principally in mature markets. And these are asset managers, investment managers who invest money on behalf of pension funds and insurance companies and so forth. Mix of properties, Class A office, logistic properties, retail properties, residential, and so forth. And so an analysis was done on the ways in which we aggregated a portfolio of properties from these investors and produced an analysis on what their potential value at risk would be over a 15-year time period, looking at a couple of different scenarios. And so I know we're focused on physical risk here today, but I'm showing this slide to show that it's measured in two ways. We look at the transition risk scenario. So again, shifting from a high carbon to a low carbon economy and what that might mean in terms of reduction in asset value, which is really a measure of how energy efficient properties are. And then we look at the physical risk, the exposure of those assets to extreme weather events. And without getting into detail, just very simply, you can see that the physical risk is more costly or potentially more costly to owners of properties. So in other words, there's a greater risk of seeing an erosion of values because of the location of those assets and the extreme weather events and the slow or the acute and the chronic events that they will be exposed to. And it may not look like a huge number. So in other words, we have what's called an average or an aggressive scenario. And so again, if you think about a distribution bell curve, the average scenario is what are the potential damage costs sitting in the middle of that curve, and the aggressive is out at the tail, out at the right side of it. And so an aggressive scenario shows over a 15-year period of accumulated losses that the value of that asset might reduce by the portfolio, pardon me, might reduce by 2.25%, which may not sound like a lot, but that's a reduction. Whereas, you know, these investors obviously are used to or accustomed to year-on-year asset value gains. And so the drop off from what their sort of accustomed returns are to what their potential losses are actually can be quite significant. The other thing to note is that obviously these are scenarios. You know, the effects could be far worse, and there's an assumption that these risks are probably underestimated, and that's partly based on the quality of the modeling and the data that goes into the modeling, and also that it does not take into account compounding risks. And so, for example, just to use present situation. In the United States, where I'm based, I mean, and globally, we're obviously dealing with the COVID pandemic, but at the same time, parts of the United States are experiencing very extreme weather events, wildfires, hurricanes, and so forth. And so these compounding events will have a greater effect on asset value. And models such as this does not yet have the capability to take into account those compounding events. And so it's likely to be an underestimate of what the actual value at risk is. So I use that just as a setup to say that we've gone through this exercise, and part of it's just trying to bring institutions up to speed as to the ways in which they can start to assess values on a forward-looking basis. Whereas previously people look at the historical record to get a better estimate about what the value gain or the value loss potential of assets is. But we need to now start to look on a forward-looking basis, and where information will be much less certain and much more subject to it's scenario-based analysis, and there are challenges with doing that. So coming out of that exercise with this group of investors, we are now working with two academic institutions, one based in Canada, York University, and the second in the UK, University of Reading. We're doing research looking at the historical record on the ways in which asset values, property values, have been affected by extreme weather events. And what they're trying to learn is, or what they're trying to establish, is setting a sort of firmer foundation or more solid evidence base to the ways in which the market is presently pricing extreme weather risk. And whether or not, or whether we should be making some assumptions as practitioners as to whether that risk is being underpriced at present. And the research is not completed yet. I think we're probably 5 or 8 weeks away from being able to present some findings. And I won't go into details about this slide, but it's not just that assets are affected and damaged from extreme weather events. The ways in which the value can be impacted can materialize in many different ways. There can be income losses by the owners or operators of that property. They can have increased operating expenses. Lenders might start to put risk premiums on those properties. And I've circled that in red, and I'll get back to that in a second. And then there are other things about just your expectations of the future and the way in which the market starts to assess value looking out in future years when you know that you may hold that asset for a period of time and then sell that asset. The issue with risk premium, a lot of that has to do with what I'll call local area conditions. And I do want to try to think about the ways in which this relates to government, local governments in particular, but government organizations who are both providers of information about climate risk, but also help set conditions that either improve adaptation and resilience to climate risk, or perhaps even block that adaptation. And so things like building codes and investments into climate resilient infrastructure, so flood walls, things of that nature, that have an effect on local areas and therefore help maintain property values potentially, or in the absence of those investments, will contribute to an erosion of property values. One of the other interesting things that we're finding about this research that we're doing right now is that there's a lot of variability in terms of the way that the market perceives risk, and there's differences in personal beliefs. And so those who feel that climate change is a serious issue, property values are starting to be discounted. where they are on coastal areas, for example, that may be subject to sea level rise, versus people who do not see this as a particular risk factor, maybe don't personally believe it. And so therefore, asset values are sort of bid up in a way that might be creating more risk into the market than otherwise would have been the case. And so I think partly that speaks to government's role as an information provider and being a source of data and resources so that both individual buyers and institutional investors can make better choices and better decisions and understand more about risk factors. So I'll just leave it at that and turn it back over to you, Pablo. And just to say that over the next few months, we'll be releasing more research into some of these findings about market risk, and then start to then move into a discussion, we think, or we hope, with a group of stakeholders, including insurers, local governments, property owners, and so forth, in ways in which some of these risks can be better shared and managed amongst these stakeholders, so that properties can values can be maintained over time. But actually, more importantly, that cities, local areas can maintain their sort of effectiveness in their functioning in the case where they're subject to more extreme weather events. So thank you for listening, and I look forward to any further questions.
Thank you, Matthew, for this very good and insightful presentation and information on the physical risks that climate change is posing on property. I don't know if our commentators would like to make any remark on Matthew's slide.
Hi, may I say a few words?
Yeah, please.
Thank you very much, Matthew, for your very interesting presentation. So what you are talking about is a very important adaptation issue, and you elaborated on the physical climate risk and asset value modeling, which helps us to better understand which climate associated risks follow the probability theory of law of large number. And you also mentioned you are working with various stakeholders to improve the understanding of the ways financial risk can be mitigated through different financial modalities. And so in terms of the insurance, my question is, how do you think where the insurance and other financial products can cover those affected the risk models after you updating the risk models, and where either the government or private sector has the advantage in playing some roles? So the second point is how risk share tools such as catastrophe bonds or disaster insurance can add to these efforts. So if you could talk a little bit more on these 2 points and let us better understand this initiative and UNDP's initiative, financial initiative. Thank you very much.
Certainly. So, so to the point about the way that risks are distributed, we do look at multiple type of effects or impacts. So again, heat, cold, flooding, cyclones, wildfires, and so forth. Some of the data is better for some of those than others, and some of the estimations are probably more sound for some of those than others. And so there is a challenge, but I think the sort of the modeling capacity is improving dramatically or rapidly. This is still quite a new field, and there's been great advances over a short period of time, and lots of service providers who are active in providing solutions to owners, investors, and of course insurance companies are sort of the holders of great data sets and have this risk modeling capacity, which historically has been more sort of an internal resource for them, but now is we're seeing the need for more externally data to be pushed out and information to be pushed out externally. this question about insurance is a very good one. So when I showed those figures to say that there might be a cumulative loss of 2.25% on this portfolio value, what that figure did not take into account is how much of that value would be or how much of that value risk would be covered by insurance. And so the fact that these properties are insured at present, it might mean that the actual loss to the owner of those assets is considerably lower because insurance payouts cover the damages. The difficulty, though, with that is that insurance is based on a year-by-year assessment of that property, whereas many investors hold properties for several years, 5 years, 10 years, perhaps even longer, and make purchase decisions thinking over those long-term horizons. So they have an expectation that insurance will be available throughout the duration of their hold period. But it may be the case because of changing climate and extreme events that insurance is either no longer available, which would create a serious erosion of the value of that asset, or that costs to insure that building increase quite substantially. And so from one year to the next, you might see your cost double and then double again and so forth. And so I guess I don't have an answer to say that we know that there's more that needs to be done in terms of insurers and property owners and then government organizations looking at ways to manage risk. And so you mentioned things like catastrophe bonds and so forth. So there'll have to be a range of risk management instruments created, or some of which are already in place, but perhaps not well utilized, some of which need to evolve over time. And it will be a challenging issue and something that we hope to help advance the discussion on.
Thank you so much.
Thank you very much.
Sure. Yeah, Matthew, thanks a lot for the answers. And yeah, I think we need to move on a bit. There is still some ground that we need to cover. So I would appreciate Ping-Yan Shah if you could share your slides. But before that, a brief introduction on his background. Ping-Yan Shah currently serves as the lead officer for urban policy and strategy at the Asian Infrastructure Investment Bank. He's responsible for advocacy and implementation of AIIB's Sustainable Cities Strategy, which forges strategic partnerships and facilitates infrastructure project preparations. He has over 20 years of professional work experience with Malaysian government agencies in promoting high impact investments in special economic zones. So Ping, over to you, please.
Thank you, Pablo, and good morning, good afternoon, good evening, everyone. Firstly, let me thank Christine He and her team at GFHS, and also the co-organizers and the other UN agencies backing this forum. Thank you for inviting us to speak on your topic, financing for resilient urban infrastructure. Let me try to upload my slides. The slides that I have today essentially will summarize what AIIB has been doing since we were established in 2016, and very quickly as well, an intervention measure that we did to help our member countries cope with COVID-19 and also the faltering economic situations affecting their countries and regions. Last month, our board approved our new corporate strategy 2030. And the key message that I would like to convey to the audience this morning or evening is that
Hello?
This is a groundbreaking financing. Yeah. Can you hear me?
Yeah.
Yeah. So for the first time, we are having climate financing target, and we envisage that by 2025, at least 50% of our approved financing should have climate mitigation or climate adaptation measures imbued in the infrastructure project. So this is something that was just approved by our board, and we are joining our other peer multilateral development banks in encouraging our member countries to achieve their NDCs and to ensure that investments are more aligned towards climate goals as envisaged in the Paris Agreement. Now, this slide encapsulates our key operations as a multilateral development institution, financing development institution. We are focused on financing infrastructure, and we have sovereign programs where we extend financing to government clients. We also extend financing to private sectors to embark on infrastructure projects. We also do equity investments, and also we provide guarantees, especially when it comes to de-risking certain projects and to crowd in private sector investments. Now, what happened earlier this year in April was that our board gave us the mandate to set up something that we have not done before for the past 5 years. And that is to set up a new lending window called the COVID-19 Crisis Recovery Facility. Now, in this facility, for the first time in our lending history, we are supporting particularly our client governments, programs that will help to firstly address emergency public health needs. Second, to beef up economic resilience, and by so doing to help them recover from the current global economic downturn. Last but not least, we are providing the much needed additional liquidity into the market to help our member countries maintain critical long-term investments. The focus is on infrastructure and also other productive sectors as mandated by our board. Now, this fund, you can call it, is set at $10 billion US, and to date, our board has approved $6 billion US of projects under this window. Ladies and gentlemen, let me briefly describe our approach to financing resilient urban infrastructure. As some of you may know, and as some of you may have read, the Asian Infrastructure Investment Bank was only established 2016. We are known to be a 21st century multilateral development institution. And we came in at a very unique time in history, whereby given the multilateral lending landscape, we already have the likes of venerable institutions like the World Bank, the Asian Development Bank, EBRD, and other regional financial institutions. So our business model is such that when it comes to project identification, project preparation, at least for now, the mandate is that we will work with the partners out there, the many partners out there, including the UN institutions and platforms like the GFHS, the ITU, etc. When it comes to identifying projects, providing the knowledge support, setting the policies, helping governments to craft the legal framework, the institutional framework for infrastructure. And infrastructure cuts across promoted sectors like water, energy, transport, urban, digital infrastructure. And we work with partners as well, existing partners, to prepare projects to bankability level. When it reaches bankability level, this is where we step in and we extend our lending. Now, over and above that, I would like to highlight that we also have a special fund which can be used for project preparation, and we work with some of our client member countries to formulate country programming memo, which are documents where we try to identify strategic high impact infrastructure projects that are aligned to their respective national policies and development strategies to be financed by us, and also by other peer MDBs and also local financial institutions and the private sector. Ladies and gentlemen, this slide of mine, the 2/3 rule, this slide has been well explained by Pablo just now, where he gave several reasons why the topic of urban was chosen for this session. So this actually encapsulates what he was conveying just now. Now, in relation to the 2/3 rule, the AIIB in 2018 released its first urban document, and it's known as the Sustainable City Strategy. Under this document, we are mandated to focus our investments in 3 priority areas, namely urban mobility and energy transition, to improve basic infrastructure and city resilience, last but not least, to promote an integrated approach to urban development. When we make investments, they are aligned with the goals set forth by the respective international agreements, and the 5 principles behind our investments are green, or climate proofing, number 2, resilient, 3, efficient, 4, accessible, 5, thriving. My next slide, ladies and gentlemen, is to convey the message that to date, most of our approved projects are aligned with the green, resilient, efficient, accessible, and thriving principles. Nearly 20% of $20 billion of our urban portfolio are aligned with the GREAT principle. 50% of our urban themed approved projects addresses basic infrastructure and city resilience. Earlier this year, we on land to our first sub-sovereign client, which is the Izmir Metropolitan in Turkey, to finance an additional line to their subway system. Now, what happens is that after 5 years in operations, we are gradually shifting from co-financing with peer MDBs to do more standalone projects, or to become lead financier and to crowd in other private investors in infrastructure projects. Now, moving forward, as I explained, our priority will be to focus more on low carbon, climate-proof urban infrastructure projects. Ladies and gentlemen, before I conclude, I would just like to share with you 2 programs that we are undertaking with the government of Cambodia, and you can access the summary information documents on our website. Now, in line with the country's national response to COVID, we have come up with 2 major programs into 2 phases. The first is the National Restoration of Rural Productive Program. And through this program, we are financing rural-urban linkages which are essentially roads connecting the rural provinces of Cambodia to the urban centers. At the same time, we are upgrading the water system, the water supply, and also the sanitation system to these rural areas in Cambodia. And this will help to cope with the reverse migration that is happening in that country due to COVID-19. Because of COVID-19, we are seeing less economic activities in the urban areas, and we see a trend where the workers have gone back, the majority have gone back to the rural areas, and they are finding that they are looking for jobs, looking for incomes in the rural areas. And at the same time, there is also a need to enhance connectivity to the urban areas to supply farming products, agriculture products to the urban areas. So phase one is we are using our crisis response facility to extend a loan to address rural-urban linkages, water and sanitation. Phase two will start slightly later, end of this year or early next year, where we are trying to address this issue of food security. And this is through our normal lending operations, but we will blend with other third-party donors and lenders. And in this respect, what we are doing is we are restoring and climate-proofing irrigation canals of 3 major provinces. We are adding on smart systems into the irrigation infrastructure across 39,000 hectares of land. And by doing that as well, we are hoping to provide construction jobs to the locals. Now, this summarizes, for example, the infrastructure work that we are investing in a client member country. Ladies and gentlemen, this is my presentation for this evening. And as I've explained to the organizer, I will need to log out slightly earlier than the rest of my panelists, peer panelists, due to some logistics reason here. Thank you very much.
Thank you, Pink, for this insightful presentation. It's great to see that that AIIB is present at all stages and follows through all stages in project development. That's great to see. Wang, would you like to make any remark?
Okay, are you calling me?
Yeah, if you would like to, I mean, very brief because we are a bit behind schedule, but okay. If not, we can move on.
Yeah, thank you very much, Ping, for bringing us the excellent job AIIB is doing. So you have been, you introduced AIIB's Corporate Strategy 2030. It is exciting to know that AIIB will designate 50% of the funding targeted to climate change by 2025. And also so far 50% has already financed to my understanding. And you also introduced AIIB's COVID-19 crisis recovery facilities. And this is extremely important for Asian countries, especially those very vulnerable countries to recovery from COVID-19 disaster. And another important element you mentioned is the AIIB's approach to finance resilient urban infrastructure. It is closely linked to our forum's topic. And this is also very important areas. And we would like to learn more about this. And you mentioned AIIB's sustainable city strategies, and we are very happy to learn that it is very closely linked to the Sustainable Development Goals, and especially the SDG 11 to promote sustainable cities. And at the end, you mentioned 2 specific projects in Cambodia, the AIIB's financing, which is target for rural infrastructure improvement and investment, including very important water supply and sanitation, which will definitely benefit the people who live in poverty and contribute to the realization of the Cambodia's commitment to the sustainable development goals. And thank you very much.
Think you would like to make any observation or?
Thank you, Chai Yun. So as I mentioned earlier, moving forward, climate finance again will be a key priority before we make any investment decisions. The second point here is there is a need for the MDBs, for all of us to also crowd in private sector capital, especially capital that remains unlocked among the private institutional investors. We are talking about the insurance firms, the pension funds, etc. Third, because we are essentially an infrastructure bank, there is a need for us post-COVID-19 to focus on connectivity, and focus has to be given to enhance connectivity again so that we can see notable global economic recovery. Last but not least, as I pointed out in our corporate strategy, the last key thing is that when we make infrastructure investments, technology must play a key role, either in driving efficiency or productivity with regards to the project or with regards to the socio-economic setting of the location or the urban area. Thank you very much.
Thank you very much. May I have a brief question in terms of the PPT? Since Pin, you are an expert and has a very long professional experience in financing urban infrastructure in Asia and in Malaysia, now in AIIB. So I have a question regarding PPP, because this is very important for financing urban infrastructure. So we know PPP mechanism can be is a vital tool for catalyzing private sector for green investment. Now climate change, we understand that it can be considered a public good. And we understand that the market alone and have less than optional investment. Thus, the public sector needs to intervention, and this is no doubt. And the challenges are what are appropriate forms of public sector's intervention, and where is the line when the public sector stops and the private sector begins. So there are some traditional approaches like horizontal, or we exploit to the innovative things like Verizon. It's a horizontal separation where the public sector enters certain services fit first to start with the public venture sector, then based on the beginner's risks, then the private sector can enter if it is proved to be viable. So could you kindly share some of your thoughts on this? Thank you.
Chai Yun, thank you very much. And your question on PPP is certainly very relevant. Let me try to address your question in two parts. First part would be public intervention. So public intervention is important because the public sector sets the policy, the institutional and legal framework that creates the ecosystem for the private sector to come in. If the ecosystem is not there, the risk will be too high, the commercial lenders won't lend, the private developers, the private contractors won't want to build and won't want to take the risk. So a public intervention, I would say, in those areas in terms of creating the ecosystem. Now, when it comes to drawing the line between public and private, when does the private sector come in? Well, it depends by region and by country, and even by certain appetite of the cities. It depends on the stage of economic development. It depends on the appetite of the industries that are behind infrastructure development in that particular locality. So I would say it would be subjective, but if you look at emerging markets, I would say that the government, the institutions like the World Bank, Asian Development Bank, and to some extent, we are also building capacity here in AIIB. We are trying to see how we can help these governments to not just to create the institutional framework, the legal framework, but once that is in place, how do we conceptualize projects and bring them to bankability level so that the private sector can come in and we can also crowd in and co-finance with other private lenders. So these are the challenges that are laid forth in front of us as we try to address climate financing gaps and as we try to utilize the PPP model to crowd in private sector investments. Thank you, Thai Nguyen. Thank you, Pablo.
Thank you. Laura, I think now is your turn. I would strongly appreciate if you could give your presentation a bit shorter, like around 10 minutes. I don't know if that is possible, if it is like too much of a big ask. Laura has spent the last 2 years overseas working on social and environmental projects, and after completing her master's degree in environmental policy with concentration in migrations and project management at Sciences Po Paris, or Political Science, the University of Political Science in Paris, Laura entered the French Green Building Observatory, which she's going to explain a bit more about in her presentation. So Laura, please, whenever you want.
Yeah, thank you, Pablo. I will do my best to 10 minutes.
Thank you so much.
And so thank you for the invitation today. I'm very glad to join this discussion. So first of all, a small presentation of the OID, my organization. So with the French Green Building Observatory, and it was created in 2012 with the goal to include and anchor sustainable development into real estate strategies. And so we gather more than 60 actors of the French construction and real estate sector, representing all of its value chain. Our missions are to encourage the real estate actors to improve their practices on sustainable development and innovation policies, and to share best practices within our working groups. And yes, so a little bit of context. What are we talking about when we speak about climate risks? Here are some figures about climate change consequences. So according to the World Meteorological Organization, 80% of natural disasters between 2005 and 2015 were climate related. And the number of extreme weather events increased by more than 250% between 1980 and 2013. So that's huge. And extreme weather events, natural disasters, and the failure of climate change and mitigation rank among the main risks according to the World Economic Forum. So it's really something important to take into account. So by 2050, over 800 million people will be vulnerable to sea level rise and coastal flooding. And the Paris Agreement recognizes adaptation at the same level as mitigation of climate change. So resilience is very important in this context. Briefly, it's really important to underline the difference and the link between adaptation and mitigation. So climate mitigation means tackling the cause of climate change, and it includes measures that reduce or prevent greenhouse gas emissions causing climate change, like, for example, moving to renewable energy. Whereas climate adaptation means tackling the current or expected impacts of climate change. And these measures include, for example, adjusting current systems to make them more resilient, like elevating buildings to avoid floodings from storms, for example. So there is a clear difference between the two terms, because mitigation aims at combating the cause of climate change, whereas adaptation aims at adapting to its consequences. And then just one more thing on the context. It's really important to explain the difference between the risks. So the term climate risks refers to the exposure or potential vulnerability to negative consequences caused by hazards related to climate change, for example, floods or droughts. And physical risks are directly linked to physical hazards that can affect the value of assets, whereas transition risks are potential changes in policy landscape, technology, and other market forces in response to climate change that can also affect buildings and infrastructure. Yes, addressing impacts of climate change requires analyzing two dimensions: the exposure to hazards and the vulnerability to them. And it has become a necessity to include these themes in infrastructure or real estate investments, because climate change is a thing of the present with consequences nowadays and not only for the future generations. So it's really important, and the cost of non-adaptation and of inaction has to be taken into account from the beginning of a project. In France, the organization in charge of reinsurance in case of natural disasters concluded in a study about the financial impacts of climate scenarios that climate change should explain 20% of the increase in sinistrality expected in metropolitan France by 2050. So it's quite important. And climate risks impact both the building structure and the economic activities taking place in it. And besides physical damages and economic operational losses, experiencing extreme events can reduce the property's value by 5 to 20%. And according to a study conducted by ClimateWise in 2019, modeling shows increased average annual losses are expected across all periods, but they are lower if global efforts to reduce emissions are successful. Therefore, climate mitigation has to go hand in hand with adaptation to climate change, and investments should be made in both. So to come back to this question, why is financing for resilient urban infrastructure so important, and what have we observed here at my organization? So investing in buildings adaptation and financing resilient urban infrastructure is a key strategy to prevent future trouble. So it's very important. And anticipation, future-oriented studies, long-term thinking, and early prevention are necessary to adapt to climate change and have resilient urban infrastructure. And yes, it's important to say that the earlier organizations invest in adaptation, the lower the costs will be in the future in terms of the impacts of hazards and crisis management. And improving adaptation and resilience implies different actors at all levels to mobilize and mix different sources of financing, such as central government funds, public-private partnerships, institutional investors, insurance, and international organisms, for example. And investors who are not considering climate-related risks for the assets may need to reevaluate the predictions in the future because it has to be taken into account. Financial actors tend to underestimate risks as if they appeared uncertain and distant, but now predictions are quite real and we know that it will happen. Because of the lack of tools and data to reinforce prediction and decision-making processes, short-sighted policies tend to be fostered when long-sighted policies and strategies would be needed. And risks and resilience are still not considered as a sufficient criterion to rule out investments in urban areas, unfortunately. And so to tackle these issues, we are coordinating the drafting of a report with the Global Alliance for Buildings and Construction on the adaptation of buildings to climate change. And the work on the report was launched in 2018 at COP24 in Katowice. The publication of this report is expected in a few weeks in November. The working group gathers many actors, so for example, ministers from France and Morocco, UNEP-FI, FIDIC, etc. And the objectives of the working group are as follows. So establishing a methodology on adaptation, offering a space for discussion for all the stakeholders of the value chain, showing the importance of addressing adaptation, addressing recommendations as well to the different stakeholders, and defining a political common statement. With this report, our goal is to give investors and all actors of the real estate value chain some clues of understanding about resilience and the importance to invest into resilience and resilient buildings. Yes, so in this report, we'll be presenting like physical climatrics and legislations, and there will be frameworks of action for many actors, all actors of the value chain. So one framework of action per actor. And the report addresses the stakes of governments, local authorities, investors, real estate developers, insurers, architects, property and facility managers, and material and equipment companies, for example. And just one last thing to conclude, at OID, we have also developed a tool. So it's a building vulnerability diagnostic tool called BATADAPT. It's freely available on our platform, Taloen. And in this tool, French actors can check the climate risks their building will face in 2030, 50, 70, and 90 by entering only the location of the building. And by doing this, they will, by doing this, yeah, we would like to highlight the fact that climate change is the parameter needed to be taken into account by the real estate and infrastructure industries. And that's why we try to impose this in the French market. And so to conclude, my key messages, climate risks and resilience should be included in financial decision-making, and assessing risks may conduct to renouncing to acquisition. This is called a responsible due diligence. And my second point is that financing for resilient urban infrastructure is a solution to anticipate future environmental, social, and societal problems, as well as to avoid crisis management issues in case of extreme weather events. And yes, I just would like to say that the cost of inaction will far outweigh the cost of taking action. So it's really important to invest into resilient buildings and infrastructure. And thank you for your attention.
Thank you so much, Laura. I think just for the sake of adhering to our schedule, I will now introduce our next speaker, who is Dr. Alexander Fischer. He's Program Director for Climate Change at GIZ. Dr. Alex Fischer is currently leading the China-German cooperation on climate change at GIZ China, including cooperation on the environment and climate-friendly urban development being based in Beijing. This includes a variety of bilateral project work in the field of climate change, biodiversity, forestry, urban low-carbon development, and environment, while additionally it includes the coordination mechanisms for regional and global projects on climate change and biodiversity funded by the German government. That also includes project work undertaken by the World Bank, UNDP, IRENA, and the UN Environmental Programme. Additionally, Dr. Fischer is advisor to the China Council for International Cooperation on Environment and Development, and also a special policy study on global climate governance and China's role. Dr. Alexander, the floor is yours.
Thank you so much, Pablo. Thank you for having me. I'm honored to speak at the Global Forum for Human Settlement. And I will load up my slides while I'm speaking. Share the screen. I find where. Share screen here. I hope you can see that all right.
Yeah, it's excellent.
Thank you very much. Let me speak about two activities the GIZ China was involved, and of course, why the GIZ obviously has not done everything, but there are roles where we have been involved. So I think I'm comfortable to speak about the development of the green finance market, which has a large chunk, obviously, in financing resilient urban infrastructure. And then I will bring you three examples where we as the GIZ have played a role as broker on the municipality level or county level in China, helping bringing together stakeholders for financing climate resilient urban infrastructure. And these will be my two topics for my input for the discussion. First of all, the green financial market in China. I mean, the whole world is obviously aware of, and since the G20 presidency of China, I guess most of the audience are aware of, but it's worth to have a look because it's now so well developed and it is winning pace, and the efforts of the teams in China, working on it, being persistent on it, and developing it more and more are really paying off. So there's a bunch of products, obviously, which are developed. The central bank, the People's Bank of China, plays a major role in developing the instruments, while the Ministry of Finance develops the legislation, and the planning ministry, the NDRC, is in charge of the taxonomy. So there's through the broad agreement in the government supporting this work on developing green credits, green insurance, green bonds, and green funds. And especially since the opening of the green financial market and the linking of the markets throughout, first of all, the vast country itself, but also then opening up to the international community with the help of the UK government and the London Stock Exchange, and also obviously through the continuous work under the G20 between from Germany and Argentina in the aftermath of the Chinese presidency helped. So the stock connection, and which required the agreement on the first taxonomies, and which were developed later on. And actually this year there's a new taxonomy on green bonds and green instruments in China, where the investors and the whole community has a clear understanding what is compiled and what is understood as green. So the stock connection starting in 2018, the standardization of issuance of the bonds, also in 2018, launch of Shanghai London Stock Exchange connection. So this international link is also very helpful for the developing country like China, even though it's so big, to bring it together with the old standing stock exchange here, London, and not only gives credibility, but also sort of forces the market players and stakeholders into the framework which is accepted by the international community. And I think this was a major step. Regulation of qualified foreign investment, inward investment was streamlined. This is of course very specifically for China, that this requires regulation, and opened up for the step in 2020, opening up in the Greater Bay Area, Hainan financial mechanism. For now, we have in China a market of green credits of 1.5 trillion US dollars combined from the 21 largest commercial banks in China, while the China Development Bank holds the largest stake of this with almost 20%. The Industrial and Commercial Bank, the second largest Agriculture Bank of China, the third largest China Construction Bank, Bank of China, fourth and fifth, and others. So the numbers obviously for China are always large, and just shows how this market develops and how strong it is. The green bonds in 2019 were issued in the amount of almost 53 billion US dollars. Sorry for the typical Chinese counting. For the Chinese audience, they are very aware of counting in 100 million steps, but make it a little bit easier. So these are almost 53 billion US dollars in green bonds. Of course, compared to the investment in all over China, it's still a fraction, but it is gaining momentum, and it provides a large chunk out of it for urban infrastructure. And then obviously through the green mechanism, we will expect that it is resilient. How was that possible? If you want to call it that way, the engagement through the G20, I already mentioned the launch of the Green Finance Study Group together with the UK government. And why is it also worth to mention it to the broader audience, since the mechanism is still functioning and is not limited to the G20, there is obviously the possibility to join the finance study group, or at least linking to it, if you want to call it that way. And through the network of greening the financial system, this is obviously not limited to G20, so it is open for now 69 members and 13 observers since 2020. Through the membership of such a network, there is the possibility of spillovers and paving the way in the countries wherever you work, who is listening to this presentation, and they encourage you together with your central bank to consider membership in the network of greening the financial system, and then using this as a platform to establish the green financial markets in your respective country as well. There you find a collection of methodologies and tools for environmental risk analysis by financial firms, which is forthcoming in 2020. And you can sort of, yeah, leverage from the, not only from the political, but also from the knowledge products and the way how the markets are established. A specific initiative, the greening investment in the Belt and Road through the green investment principles, which were developed between China and the UK. And I have no problem as a German to mention them, because I know the German government is very much in favor of the green investment principles. And we are also, as a GIZ, are using them in multiple places. And there's a special initiative, so whichever country is part of the Belt and Road can link to it and can also make use of the mechanism in this. And I understand, and maybe there's somebody in the audience who also can share their experience, that through this mechanism, it should be easier to push forward or put forward the green investments and those investments along the Belt and Road initiative are considered to be green and climate resilient. So that's why I think it's also worth to mention it here. Aim to incorporate low carbon and sustainable development into the BRI by encouraging financial institutions and corporations involved and invested in the BR projects, and helping you obviously also in the country where you operate to maybe have a platform to put forward green investments along the BRI. Then the Chinese government and international donors, also the German government, are supporting the so-called Green Finance Leadership Program, and which is in coordination with the CCICED and the Green Finance Working Group and the CCICED. And through this, there's also a training mechanism for interested country representatives and practitioners to join. In 2020, for example, was a capacity building webinar of the GFLP, which has attracted 2,000 participants from all over the world. So I would also encourage you to have a look at the possibilities of capacity building on this, to use it for examples, which maybe we find some inspiration from the 3 examples the GIZ team was involved, which I would like to present to you now. The first one is the so-called Sponge City initiative in Xiamen, and the second one is a wind power initiative in a city called Hohhot, and then a very bottom-up approach from the municipality population in the Qingyuan County. A few facts about Xiamen, where we supported a PPP approach to promote resilience. Xiamen is located in southeast coastal area of China, comprises roughly 2,100 square meters, including the island of Kalkungsu and island coastal areas. The residential population is 4.3 million, with an urbanization rate of 90%, and an annual average rainfall of 1,530 millimeters, which are over 80% fall between March and September. And the Xiamen city was selected in 2005 as one of the sponge cities, as pilot cities for environmentally sustainable flood control projects. And we have been involved in helping the sponge city to develop. This is the overall framework, if you want to call it that way. So a need for action, an urban water shortage, urban water lodging, urban water pollution and ecological degradations. In a nutshell, this was found in Xiamen, and before the project, the goal was to infiltrate, detain, store, cleanse, use, and drain. And this was done also, of course, here very short and in a overview only, through sponge infrastructure work with water pollution control projects, urban river restoration projects, water lodging preventing project, construction of green infrastructures, construction of sponge roads, construction of sponge communities. And I go here first, the role we as GIZ found our space, if you want to call it that way, as an international implementation agency to really help bringing together the stakeholders to make this PPP work and also economically feasible, because obviously it costs a lot of effort to bring all these stakeholders together and make them follow a joint path, if you want to call it that way, that at the end of the day, the banks and financial institutions feel comfortable enough to provide the loans to the project companies with government support, and the project sponsors overseeing this, which obviously are involved in Xiamen itself. They have to be, these people have to be local. Insurance company has to be found to provide insurances. And this was a vast undertaking to bring all these people together, but it worked in the following amount. Again, these are 100 million, this time yuan and or renminbi. To make it short, these 300, these are roughly 3.5 billion US dollars brought together in the different investments through the overall vehicle, which I just showed you, this PPP structure. Second one, getting smaller now.
Alexander, we need to start wrapping up a bit.
Okay.
So
Then the last one only.
Yeah, that's all right.
Yeah, because it's so different, and I think it's very interesting.
Yeah, absolutely.
In Quangang County, the bottom-up approach. So we help to bring together the villagers, and the villagers here in this case started to invest jointly in photovoltaic with an amount of 200,000 yuan for each villager, which is roughly 30,000 US dollar, obviously on a voluntary basis. And it was possible to provide a fixed dividend of 10% plus. The whole idea was to generate electricity for a bamboo producing factory in the county, and if you want to call it that way, which was organized as a joint effort from the villagers. I think this is something which we observe more and more in China. So it is possible to have also on this level joint efforts and bring together the financial resources for the resilient infrastructure investment. And just would like to let you know, the 15 million yuan are roughly 2.5 million US dollars. Thank you very much.
Thank you, Alexander, for your presentation and for the case studies. This last example is actually a crowdfunding, wasn't it?
Yes, it's a sort of on crowdfunding with a bit more structured, and the people know each other. It's not through online platform. Yeah, that's great. I mean, that's great that GIZ is exploring these alternative ways of financing projects. Extremely interesting. I would like to give the floor now to Kai-Yun. Kai-Yun, would you like to give us an overview on the child-friendly cities initiative that UNICEF is being currently developing?
Okay, thank you, Prabh. And I will be very brief, and just highlight the key points for this initiative. UNICEF, United Nations Children's Fund, has led an initiative called the Child Friendly Cities Initiative. Probably you heard about that. So this initiative supports municipal governments in realizing the rights of their children at the local level, using the UN Convention on the Rights of the Child as its foundation. a key purpose of building a child-friendly city is to ensure that every children in the city and in the urban and in this world are visible in budgeting as in other government activities. Child-friendly infrastructure such as green spaces, play areas, daycare centers, and children's homes required for providing a safe environment for children to grow. And these important elements has been missing from urban planning so far, as Laura mentioned, and from the planning perspective, and there are very short-sighted project without consider the sustainability of the urban projects. So creating a child-friendly city means it allows children the freedom to use the public infrastructures independently. And it's going to be school or recreation spaces. It is crucial that a city has the basic infrastructure available, such as we mentioned earlier, the green spaces, play areas, also cycle tracks and free zones, and the proper roads for kids to move around without any fear and move safely. So further development of the resilient city infrastructure as the topic of our forum. And the planners must ensure, the city urban planners, and must ensure these aspects for child-friendly infrastructures are incorporated and implemented on the ground. So there are 3 points I'm going to propose on this aspect, and because a facility need to friendly children, it need to be friendly, city facilities need to be friendly to the children. And if it is friendly to children, and I believe it will be friendly to everyone. So all of panelists are talking about is closely related to this topic. And we are building a resilient and sustainable world, and which are the part of the, it serves to our children, because the children is our future. And my point is, for all the topics we are discussing here is all related to the welfare of our children. So the 3 points to be proposed is: first, enhance the awareness of project developer and the local governments about the children's needs related to infrastructure development. The second one is to promote the planning and the construction of infrastructure which meets the needs of the vulnerable population, especially vulnerable and marginalized kids and families. And while being sustainable and future-proof for children in generations to come, it is a long-term goal. It's not short-sighted the solution. The last one is simultaneously to increase the attractiveness of a good infrastructure for financial investment. We are talking about all kinds of the financial instruments. So how to explore innovative financing mechanisms, such as, you mentioned insurance, social impact bond, etc., to attract financiers to invest in sustainable and child-friendly projects. This is the end of my comments. Thank you very much.
Yeah, thank you. Thank you so much. I have to say that from GIB side, which I'm representing, we are also leading a work on child-friendly infrastructure. So I would love to connect with you bilaterally to get to know more about these initiatives. Yeah, promoted by or developed by UNICEF. Yeah, I think we're running out of time. So if I may, I would like to ask each one of the panelists just to provide to the audience one key message that they should take away with them after this presentation. So Laura, may I start with you?
Yes, sure. So I would say that we need to change our way of thinking and viewing things. And maybe the COVID-19 is a huge opportunity to redefine our standards in terms of resilient buildings and and I mean importance of investing in resilient buildings.
Brilliant. Alex?
Thank you so much, everyone. Thank you, Pablo, for the opportunity. My takeaway is that we really have the intellectual and sort of framework for climate resilient infrastructure investment. And I think if we put the right people together, it is possible to do it from the smallest municipality to the largest city. This is my takeaway.
Excellent, thank you. Thank you so
hello,
much.
hello.
And
I'm sorry to interrupt. This is Christine. Hello, Pablo. I think we have some misunderstanding here. I think next we have to give the floor to Mr. Chen Yungang, the president of Hong Kong Urban Management Institute, vice chairman of the Committee of Cities Innovation Promotion, Shenzhen, China. Mr. Chen, yes, you have the floor.
我用中文好了。今天是个特别的日子，因为深圳市刚刚度过它经济特区的40周年，但是到今天为止，深圳和香港是没有通关的。那同时呢，我们所在的这个城市正在推进整个南中国地区9+2，就11个城市的大湾区的建设，国际化的大都市。那这样一个3个信息的结合，回到我们今天的主题，为弹性的城市基础设施投融资的时候，我们一定要非常清楚的去感受到，无论是在城市经营中多么的经济的重要，多么的这个社会的福祉，但它是离不开我们说的这个生态经营的。当我们在谈投融资的时候，我们讲的生态经营之后，我们现在更多的会聚焦到所谓智慧城市。但是无论是有多么的智慧，科技多么的发达，科技赋能如何的强悍，它也离不开生态的基底。那在生态的基底之上，更为重要的，当我们在推动城市建设、城市经营的时候，是离不开适度的。我说的适度是中国的原则，中国的有一个成语叫适可而止。某种意义上来说，是因为我们过度的投资，过度的追求速度的，过度的追求规模化，过度的追求都市化，造成了今天的城市的这个综合症。尤其在极端气候、极端地理条件下的城市，它的这种脆弱性和风险性，我认为可能是我们过去300多年以来，工业革命以来很难以去评估得到的。所以我觉得今天这一个场中，我非常清楚能看到绿色阶策某种意义上是首位其冲的，是应该首当其冲的一个部分。因为如果没有这样一些绿色的阶策，关于一个大系统的阶策的话，所有的后边的部分都是局部的、片段的和碎片化的。那在绿色阶策、绿色评估的基础上去展开的绿色的投资和融资，它才是有方向的，它才是有价值主张的，也才能是多元共赢的。那这样一个城市，它才可能回归我们说的弹性的、适度的，是可持续的。这是我关于今天晚上的一个粗浅的一个印象，但是我给到的建议是比较简洁的，因为今年是一个特别的年份，我们不谈特别复杂的国际因素，但是我觉得今天这么好的一个论坛，这么丰富的一种内容上，它的目前的分享性还是值得去扩大的。所以我想，国际合作的密度、强度和速度，尤其它的广度要更为的，就像今天的这个论坛一样。那目前在中国国内来说，我觉得国际合作的呼声很高，但是目前面临的国际的障碍还是比较明显的。所以在这里面，我觉得我们今天的论坛做了一个很好的一种引领，就是说我们一定要去强化国际的合作性。那在这个强化的基础之上，这是一个特别高调的、高维的一个维度。那在下面的，我觉得最重要的是特别希望能做国际的合作，无论是在做绿色的阶策，还是我们说绿色的建筑，还是绿色的社区。那在中国，特别需要的实际上是社区营造，就公众的参与度。目前是远远不够的，因为中国的自上而下性是非常 OK 的，但自下而上性这个部分还是要做一个很好的一个协同。最后一句话，希望特别有一个适可而止的适度投资的这样一个未来才有可能性。我就先说这么多，谢谢各位，谢谢。
Mr. Chen, thank you so much for your words. So I think, yeah, I would like to thank everyone for your contribution to this session, and especially the audience for having joined us today. It's been a real pleasure moderating this session, and I hope to meet you here at some point in Basel, whenever you want. So thank you so much, and see you very soon.
Thank you, everyone.
Thank you. Thank you for all speakers. Thank you. Thank you for everyone.